Debbie Marcoux is licensed by the Department of Financial Institutions and MLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
Hello and welcome to Mortgage Mom Radio. I am Debbie Marcoux and I am the Mortgage Mom. Today is January the 3rd, 2022. Can you guys believe it? We are in a brand new year. My dad jumps on. He says, hi, guys. I'm at work. Hi, Dad. Thanks so much for joining. If you guys are watching, please let me know that you're here. Please say hi. Put something into the feed. Give me a thumbs up. Ask me a question. I want to make sure that you guys know that this is an interactive show. We want you asking questions. The more questions that you ask, the better that we are. The more things that I can answer for you, the more information I can provide. I am doing the show solo today. We've got, unfortunately, a good amount of our staff is out sick. So, it was a rough, I think, holiday for many people. Many got sick. So all of my love and support to all of you that are at home healing and trying to feel better. But I am here and I'm doing this and I'm doing it on my own. So I'm going to soldier through and we're going to hit a very important topic today. We're going to talk about the rate hikes that the Fed is talking about giving us here in 2022 and in 2023. What does that mean to you? How will that possibly affect or change maybe some decisions that you've been thinking about making financially? Very important, understanding around what are these Fed hikes and what exactly is tapering and what does all of that mean? So that is what I'm going to get into today. Again, the show is interactive. I want you guys doing this with me. What is the very best way to know that we have gone live? Well, on YouTube, make sure you guys subscribe to the channel and click that notification bell and turn it to all. That way, when we do go live, you know that we are on. You can click on that. You can watch us right through YouTube. You can interact with us. You can put your questions in the feed, and I'm going to answer those for you. For everybody listening as well, we are here to help you in any way that we can. We are an educational show. We are trying to bring you very important information, and we're trying to help you guys plan for your financial future. So whether that is with purchasing your first home or refinancing or trying to get some debt paid off, that is what we are here for. That is what Mortgage Mom Radio is all about. So give us a call. The number is 844-935-3634. That's 844 We Lend for You. That's LEND and the number 4. So WELEND and the number 4. If you text the word mom to that number, you will get a text message once a week letting you know that we go live. Even though we will have shows on multiple times a week, we are only going to text you once to let you know that we are live, but at least you will not miss one show a week. So if you would like to opt into that, please text the word mom to 844-935-3634. Make sure you text the word mom is in your subject. If you put subscribe or please opt me in, it's not a monitored text messaging program. It's all automated, so it's not going to get you opted in. So just make sure that you text the word mom. That will get you opted in. It will also get you a link to our phone app. Our phone app is awesome. It gives you every tool you could possibly need for mortgage. So whether you're trying to run a monthly payment, it's got calculators in there, our YouTube, our podcast, contact us, send us an email, ask a question. It's all there, even call our office. So if you'd like to use the phone app, that's the best way to get the link for the phone app. Same thing, you're going to text the word mom to 844-935-3634. Again, if you guys are watching, please let me know that you're there. I can see Heather jumped on. She says, hi, everyone. And my dad put something into the feed that I can't actually see or read. My eyes aren't that good. Little figure of some sort. But again, if you guys are out there, let me know that you're there. Let me know you're watching. And please ask your questions. So we are going to jump into rate hikes. What is expected? What am I reading? What am I understanding? And what does this mean to you? So just a quick recap. It was on CNBC middle of December, right after the Fed did their final meeting of December 2021. And, it reads a full recap of the Fed decision with Powell highlights and instant investor insight. So kind of important, that's their headline, trying to get you guys to watch or to read the story, right? And it says, the Federal Reserve concluded its December meeting Wednesday, announcing it will speed up the taper of its asset purchase program. The Fed also indicated it sees as many as 3 rate hikes in 2022. Okay, so let's number one start with, what does it mean, speed up the taper of its asset purchase program? What does that mean? So up until today, the Fed has been buying bonds, and they've been buying mortgage bonds. They've been buying just bonds at an incredible level, tons and tons of bonds. What does that do? It keeps our rates low. They are going to start to taper. What does that mean? They're going to stop the purchasing. They're going to slow down how many bonds that they are buying, which in turn is going to increase the interest rates. Not only that, but the Federal Reserve they brought down, everybody heard the prime rate came down. We got 1.5 million phone calls in 2022. The rates dropped to 0. Can I refinance for 0? No, the rates dropped to almost 0. I believe it was 0.25, and that is what they are lending to the banks at. The banks then in turn lend to you at a higher interest rate so that they can make money. So what does this mean? So what they're saying is that 3 times in 2022 and probably 3 times in 2023, they will be increasing that Federal Reserve prime rate. So on top of not buying as many bonds, which is already with the prime rate where it is at today, that is already going to start to make our interest rates increase. And then on top of that, they will then change also the Federal Reserve prime rate, which will additionally have our rates go also up higher. So what does that mean to you? Very, very important for you to understand what is coming. What does this mean to me? Should I be concerned? Should I worry? Is there anything that I can do to try to safeguard myself in, knowing what is on the horizon, right? And again, I want to make sure you guys all know this is an interactive show. Please, please put your questions, comments into the feed. I love that. I want to answer them for you. I can see that Sean Casey Williams jumped in and he said, Happy New Year. Sean, thank you so much. Happy New Year to you. I know you are in Georgia and you are watching, and I love that. Thank you so much. And then I had somebody else ask, it looks like, what is the current interest rate? So that is a great question. I can't answer that question. So every single person gets a different interest rate. Your interest rate is based on you, your credit score, your loan program, how much equity do you have in your home? If it's a purchase, how much money are you putting down? So many things are going to determine what your interest rate is. So I can't answer for you what is the interest rate today, but I can explain to you what do these Fed hikes mean to you and where are interest rates going. So Karen jumps on. She says, love your shirt. Thank you, Karen. Appreciate it. That's my mother-in-law, my beautiful mother-in-law. Yes, I had to sport the Grogu today. Gotta love Christmas. You always get nice, cute little things that you want to wear. So no mortgage mom shirt for today. But anyway, thank you, Karen. All right. So what does this Federal Reserve hike mean to you, right? Very, very important for you to understand. So number one, let's talk about the tapering. Tapering is the easiest thing to understand. When the Fed is buying a lot of bonds, they are keeping the prices or the rates low. As soon as they stop buying bonds, then the interest rates are going to start to increase. That simple. Not a whole lot more to talk about in that regard. Now, Federal Reserve prime rates, okay? If your Federal Reserve prime rate currently today is at 1/4 and your credit card is tied to your prime rate, or your equity line of credit is tied to the prime rate, your interest rate on that debt will go up when the prime rate is increased. So you will see credit card minimums move. You will minimum monthly payments that you owe, interest that you are paying on home equity lines of credit, any debt that you have whatsoever that is tied directly to the prime rate, you are going to see your minimum payments change, and you are also going to see the interest that you pay overall in general also change. So keep that in mind. That is something that is coming. So if they increase it 3 times in 2022, then you're going to see your minimum payments and the interest that you owe on your debt also increase 3 times in 2022. So I had Kevin's jumped on. He says, I'm paying 21, almost 2,200 for rent. I live in Woodland Hills. Can I afford a house around here? So he's actually asking the question, I pay $2,200 a month in rent, and can I afford to buy something in Woodland Hills? So I'm going to tell you, Kevin, that is an absolutely great question. $2,200 a month is a very decent amount, basically loan amount or sales price that you would be able to get yourself into. But it is going to depend on how much money that you have down, what your credit score looks like, what interest rate. And as far as Woodland Hills is concerned, I would need to get you over to a real estate agent who can help you in that area to let you know what you could afford for that monthly payment. So number one, it's a great question, but the very best thing that we can do is to actually do a pre-approval, figure out exactly how much that you are qualified for, how much sales price can you buy, what does that look like in your monthly payment? If $2,200 a month is comfortable for you, what does that mean in sales price? So we can work forward and backwards to figure out where your budget is, how much do you have available for down payment and closing costs, and then get you on to the right real estate agent in the neighborhood that you're looking for so that they can start to put you together with the property that works best for you. So would love it if you'd reach out. And for all of those that are listening, that was an absolutely perfect question. We want everybody to jump in and ask those questions because I want to be able to answer them for you. Again, it's an interactive show. You guys have to watch me do it live in order to ask the questions. I am on here Monday, Tuesday, Wednesday, and Thursday on YouTube doing these shows on all kinds of topics. So if you want to jump in, you can always do that. Please subscribe to the YouTube channel and click that notification bell to know when I do go live. So you have to make sure you click it to all. I am only going to send out one text message a week so that you guys do not get bombarded in text messages when I'm going on in the studio. So make sure that you do subscribe. If you would like that text message so that you don't miss any of my shows, please text the word mom to 844 We Lend for You. That's WELEND and the number 4. Text the word mom. You'll get one text message a week, and you'll also get a link to that awesome phone app that I have that's going to give you all the tools that you need. So Deborah jumps on. She says, hello, you look terrific. Thank you, Deborah. Appreciate it so much. Mercedes jumps in and she says, how will this affect VA loans? So that is a great question, Mercedes. So in the show today, we are talking about the Federal Reserve prime rate and how they are planning to hike it 3 times in 2022 and 3 times in 2023. That is at least what is anticipated. Now, if that is what actually happens, all we can do is wait and see. Because they say that they're going to do it doesn't necessarily mean that they will. Part of this article that I read is that, it's really going to depend on how the variant and new variants come along and change things, right? That could very, very well change what their plans are. But they are not anticipating that it is going to. They said that we've all lived with getting all of this information about these variants for quite some time now. We're all learning to live with the fact that there's going to be another new one and another new one and another new one. So it's not affecting the markets as much as they expected. And they really do feel that moving forward to try to help curve the inflation, the best thing to do is to start to taper and to increase the prime rate. So how will this affect VA loans is Mercedes' question. It's going to be the same whether you're a VA loan, an FHA loan, a conventional loan, all loans, jumbo, doesn't matter. If interest rates start to rise, which they already have, and we'll talk about that in a minute. If interest rates start to rise, or they already are, again, so I need to stop saying if. I need to say now that interest rates are starting to rise, and I think that's the most important thing that you all need to hear. Because they're starting to rise, all interest rates on every loan program will be higher than where they were before. You cannot touch an interest rate today that you would have locked in as a purchase or a refinance in 2020. You cannot touch a rate today, as of today, January the 3rd, that you locked in and you closed in 2021. So the first thing that I want to make sure that you're all hearing is a sense of urgency. If you have, and a couple of things that are really important to know. Many of you might have done a refinance and pulled out cash, and you talked to us or you talked to another lender who said, Do this loan, get your cash out, pay off all of your debt, give it about 6 months, let your FICO score increase, come back, let's do a rate and term refinance, drop the interest rate, get rid of mortgage insurance if you did an FHA. Whatever their reason was behind it was probably a good reason at the time, but they obviously didn't know where things were going in the future. So if you were one of those people and in that situation that you did something as a temporary and need to go back and get your permanent financing done, right now is the time to call. Right now is the time to be getting on top of this, getting that application started. Even if your lender told you you have to wait 6 months, call us anyway and talk to us. There's a very good chance that you do not, and that we can get you started right away. With a VA loan, Mercedes, interest rates are going to go up just like every other loan program out there, and they've already started going up. The interest rate today is higher than any interest rate that I could have offered to any single person in 2021. So just keep in mind that interest rates are on the rise right now, and they're going to only continue going up further throughout this year, at least in my opinion as the mortgage mom. My opinion is that we are only going to see interest rates increase throughout 2022 and increase further throughout 2023. So if you need to get permanent financing put in place, you did a temporary loan at some point in time during 2020 or during 2021, right now would be the time to get that permanent financing started. Lock it in right now. Stop the bleeding. While interest rates are still low, they are still under 4%. We are in the threes today. We are in the low to mid threes, still very great interest rates depending on what exactly it is that you are doing, but something definitely important for you guys to be thinking about. If you have an FHA loan and you've got the equity because home values have gone up so much, now would be a great time to explore whether or not you can do a refinance and get rid of that mortgage insurance. Same with a conventional loan. If you have a conventional loan and you have mortgage insurance, right now would be the very best time to explore if we can get rid of that mortgage insurance. So something very important for you guys to be thinking about and getting on the books and talking to us about to determine whether or not it does or does not make sense for you. We are very straightforward. My office is not here to bombard you. We are not here to beg you. We are not here to, call you 95 times until you do a loan application. That is not what we are about. We are here to give you education and information, hope to build a relationship with you, and then turn around and do an application when you're ready or if it makes sense for you and your family. So the best thing to do is to get on the books, get the consultation, get the information. How do you do that? So number one, you can go to the website, go to mortgagemomradio.com, and you can click on the book appointment button. You can actually create your own phone consultation right there from the website, from mortgagemomradio.com. So don't forget the radio. Many people do that. mortgagemomradio.com. You can also call the office, same phone number that you text. So it's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. You can give us a call. We'll either get you over to somebody immediately, or you can actually ask for me and say you would like to be on my calendar, and they will get you booked on my calendar to talk with me directly. So please keep that in mind. If you want to talk to somebody right now today, my team is here and everybody is willing to talk with you. If you want to get on my calendar and you want to talk to me, the mortgage mom, Debbie Marcoux, that's all you have to ask, and they will get you booked for me. So please understand that I am available to talk to everybody and get you moving in the right direction. So Diane jumps on. She says, hi, Happy New Year's. Diane, thanks so much. Happy New Year's to you. Looking forward to getting your son hopefully into a mortgage this year. And Kevin says, does getting pre-approved affect your credit score? I have a friend who works with Loan Depot. Does it matter who I get pre-approved with? So with that, Kevin, I think that's a great question, and I will answer it for you. But we're going to take a really quick break, and we're going to be right back. All right. Well, welcome Welcome back to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom, and I'm going to be here on YouTube every Monday, Tuesday, Wednesday, and Thursday, bringing you new important content for your educational needs. I want to make sure that you guys all subscribe to the channel, click that notification bell, and make sure you turn it to all so that you know when we go live. If you want to know one time a week whether we're live or not, text the word MOM to 844-935-3634. That's 844 We Lend for You. That's WELEND and the number 4. So this is an interactive show, just like Kevin so far has been asking questions. Diane jumped in and said hi. Let me know you're here. Let me know you're watching. Let me know you're listening. I want to answer your questions. The questions that you have are what others are thinking and is the very best way to help you guys out. The other way to help you is to get a phone appointment. You can book that with me or anybody else on the team. Go to my website, go to mortgagemomradio.com, or call us. It's 844-935-3634, and make sure you get on the books to talk with me, or you can get transferred right away to somebody on my team. So Lee Hunt, she jumps on. She says, just closed on our house today in Nevada and used Mortgage Mom Radio. Heather was incredible, so personable and so professional. Love you guys, and will definitely recommend you all to everyone. Lee, thank you so much, and congratulations. I did see your loan funded this morning. Believe it or not, a lot of times you guys do not hear from me, but I watch everything, and I know exactly what's going on, what clients are, in session, on their way, moving forward. And Lee, we are so excited for you. So congratulations. And thank you so much for saying that. And of course, Heather's jumping on and says, hi, Lee, congratulations to you and the family. And she says she absolutely loved working with you. So again, this is interactive, guys. I want to make sure you guys are putting your information into the feed and we're getting your questions answered. So let's get back to Kevin. Kevin says, does getting pre-approved affect your credit score? That's number one. Yes, it can, and we'll talk about that. And number two, I have a friend who works with Loan Depot. Doesn't matter who I get pre-approved with. So that is question number two. That is a great question. So number one, does it affect your credit score? Just like anybody at all pulling your credit or getting your credit report pulled, yes, it is an inquiry on your credit report. When we do a pre-approval, we do have to pull your credit. We have to know what your credit score is, and it is the only way that we can actually run a decision through our computer system to get that approved eligible response. Yes, we can give you your loan. So it does have to happen. We do have to pull your credit report. Now, keep in mind that a mortgage inquiry is going to be a little bit softer on the credit score than, let's say, going and getting your credit report run to purchase a car or to open a brand new credit card. It is going to be a little bit softer on the credit report, but it is still an inquiry and it is still going to give you a little bit of damage with that first pull. Now, the credit bureaus do know that when you are shopping for a mortgage, you are shopping, and you may actually have your credit report pulled a couple of times. That is absolutely okay. The very first time that it is pulled is when it's going to do the damage. And then after that, you have 30 days and you can have it pulled numerous times by mortgage companies. So again, keep in mind, it has to be mortgage for mortgage pull, but you can have it pulled by another mortgage company within a 30-day period where it should not change the actual credit score. It will only reflect on your credit that another company has pulled the report. So that is something to keep in mind. If anybody listening did get pre-approved with another lender and you guys really want to call us and you want to see what we can do for you, as long as your credit report was pulled within the last 30 days, it's not going to hurt in any way at all for us to take your application and pull your credit report again. So just keep that in mind. Also, your credit report is good for 4 months, 120 days. So we do not have to re-pull your credit report again until we hit that 120-day mark, which by the time that we would then have to pull again, that inquiry ding should have already fallen off. So your credit score would have come back up again. So I would not be too concerned. What I would be concerned with, though, is if you do a pre-approval and then on day 35, you want to do another one and pull it again, and day 35, pull it again, and day 30, right? So now you are going to end up with getting all of those hits and all of those score drops. So just making sure you're being mindful of that. So that brings me into question number 2. I have a friend at Loan Depot. Does it matter who I get pre-approved with? you really should try your very best to choose the lender that you want to work with for the pre-approval and through to closing, because you don't want to have your credit report pulled numerous times. You want to try to stick it out with one place. So do your shopping, decide who you want to work with, and start your pre-approval application there. Sometimes things can change, right? You can go somewhere, you can try to get pre-approved, maybe you have a hard time. They tell you you're not pre-approved, or they can't get you pre-approved, or maybe the personalities aren't mixing. You're kind of clashing with that person you're talking with on the other side of the phone. That doesn't mean you're bad, doesn't mean they're bad. Everybody's got different personalities, and sometimes you just want to switch up the lender. That's okay. Do that. This is a big purchase. This is a big refinance. This is a lot of money that you are taking out in a loan. So make sure you are working with who you are comfortable with. But if you can at all, try to keep the company that you start the pre-approval with, the company that you plan to use for your purchase. And the reason for that is that when you write an offer, the pre-approval letter is going out to all parties, to the seller, to the listing agent. Everybody is aware, even the escrow company, who that lender is that gave you that pre-approval letter. Now they're going to be reaching out to that person and asking for updates and information about your loan. So if that's not who you plan to go with, then it's just going to create a bunch of extra work for you as well. So do your best to try to start with the company that you would like to finish with. And again, if you end up needing to change your mind, go somewhere else, flip or switch for one reason or another, that is absolutely perfectly acceptable. But the question was, where should I start? If your friend with Loan Depot is who you want to do your loan with, then I would start your pre-approval with that person. That would be my opinion. So again, it's an interactive show. I want to make sure you guys know that you can put your questions into the feed. Ask me anything that you want. That's what I am here for. I am the Mortgage Mom. I'm Debbie Marcoux, and we are going to take a very, very quick break, and then I'm going to read a comment that just came in from William. And again, if you guys are watching and you have questions, please feel free to get those questions into the feed, and we're going to take care of all of them today. How do you call us? How do you get on the calendar? And how do you make sure that you get an appointment with me? You're going to call 844-935-3634. And with that, let's take a super quick break, and we'll be right back. All right, and welcome back to Mortgage Mom Radio. Like I said, it's a super quick break. It's enough for me to get a little water in and get back to you. So I am Debbie Marcoux. I'm the Mortgage Mom, and I'm here answering all of your questions. We started off the show with rate hikes and what does that mean to you and where is it going? But obviously, you guys are my listeners. You're the ones asking the questions, and the show is going to move in the direction that it needs to move based on the questions that you ask. That's why I love this show. That's why it's educational and informational. And that's why I want you guys to be doing it with me live when I am on YouTube. So please find Mortgage Mom Radio on YouTube. Subscribe to the channel. Turn on that notification bell to all so you know when we go live. And please give me a big thumbs up on the video. It really does help to make sure that it gets into that YouTube algorithm and we can help as many people as possible. So Mikey, Grandpa's saying our volume needs to come up a little bit. So if you can turn me up, that'd be great. And so William says, hello, I was wondering, and I'm not sure if I'm off topic, but I was curious of why would a lender send out a closing disclosure before C2C? So I want to make sure everybody understands CTC means clear to close. It doesn't seem to make very much sense. So William, I love that you asked that question. And the fact that you know the word CTC means that you're either in the business or you have just gone through the loan process or you're in the middle of it and you've heard somebody tell you CTC or clear to close. The reason that we do that is that you cannot close your mortgage. We cannot actually have you sign loan documents for a minimum of 3 business days after you sign the closing disclosure. So even if your file is not ready to be in the doc department, if your loan was through its initial approval, your appraisal's been received, underwritten, approved, everything is pretty much ready to go, just gathering up those final docs. As long as we can get all of the fees from the escrow or title company or attorney, depending on the state that you're in, we can get everything balanced and ready to go. the insurance information has been completed and provided to us, then we can make sure that we get the closing disclosure out to you so that you've got time to review those numbers, ask your questions, sign the document, wait the 3 business days. By that time, your loan should be cleared to close and in the loan document department, ready to be issued to you for your signatures for closing. So it's truly a matter of making sure that we're not holding up the process and we're keeping things on track for you and making sure that you're closing on time. So that is why there is nothing in the rule book that says that your loan has to be cleared to close or 100% ready before we issue the closing disclosure to you. And many times we're just getting that out to make sure that we're ahead of the game. So we want to make sure you're prepared. You know how much money that you need. You know how much funds that you need to have, where you're sending the funds, how to get it there, waiting for your loan documents to come out to sign. So again, just getting everything prepared in advance to get you closed on time. So I hope that that does help. But if you have another question, again, it's an interactive show. Throw it into the feed. Please let me know, and I'd be more than happy to read it and answer the question for you. So once again, I'm Debbie Marcoux. This is Mortgage Mom Radio. We're bringing you these shows Monday, Tuesday, Wednesday, and Thursday right here on YouTube. The shows do go out to radio on Saturday and Sunday, depending on the market that you're in and the station that you like to listen to. My producer, Drew, takes all of my shows from the week, puts them all together as one conglomerate, and makes us one-hour show for radio on the weekends. So if you're listening by radio and you'd love to interact, we want you to jump onto YouTube, go to Mortgage Mom Radio, subscribe to the channel, and turn on that notification bell. Or if you would like to get a text message once a week to let you know during one of our shows that we are live, make sure that you text the word MOM to 844-935-3634. That's 844 We Lend for You. That's WELEND and the number 4. That is the exact same telephone number to call the office, get an appointment, and you can either ask for me specifically and get booked on my calendar, or you can talk with somebody right away. If it is Saturday and Sunday, we do have people that are ready to take calls for the calendar, but we don't actually have anybody in the office answering the calls live. So make sure that you do book an appointment with the call service, or you book an appointment on the website, and you will get a phone call back on Saturdays and Sundays. If you do not see a day and time that works for you, please reach out to me. Please send me an email to questions@mortgagemomradio.com. Let me know what day and time works for you, and I will make sure that I get someone from my team who is available to assist you during the hours that work best for you. So we want to make sure that we take care of everybody. If you need a little earlier morning appointment, a little later in the evening appointment, that is all okay. We are here to work with you. And again, we do mortgages. We do mortgage loans, but we are not pushy. We are going to talk to you. We're going to educate you, give you the information that you need. And then we are going to wait for you to let us know if there is something more. Would you like to do the application? Would you not? What works best for you? So please don't expect us to call you and hound you multiple times. We're not going to do that. Some people actually can get offended because they feel like we didn't follow up enough. I'm going to be honest with you. That is not what I teach my team to do. We are here to be more hands-off. We want to give you the information. We want to educate you. We want to show you the numbers, whether that is for purchase, whether that is for refi. And then we want you to make the decision that you're ready to move forward. And at that point, we are going to be completely hands-on and take you under our wing as the moms in charge. So please keep that in mind. If you guys want our help, all you have to do is ask for it, but we're not going to hound you. So once again, this show was all about the Fed hikes. What does that mean to you? Remember, when the Federal Reserve increases the prime rate, which they have promised to do, and we'll see if they do it, but they have promised to do it 3 times in 2021 and 3 times in 2022. When they increase those rates, you are going to see credit cards that are tied to the prime rate, home equity lines of credit that are tied to the prime rate, and any other debt that you might have that might be tied to the prime rate. So many of the debts that are tied to prime rate are adjustable debts. So keep that in mind if it's an adjustable rate. If you are tied to the prime rate, you are going to see the interest that you owe on the money go up. You're going to see the minimum monthly payments that you make go up. And that is going to happen increasing multiple times this year. So if you own a house and you've got equity, which almost everybody does, now would be the time to call the office, talk about doing a debt consolidation loan, pulling out cash, paying off debt. If you already did that in 2021 and 2022, and you talk to your loan officer about needing to refinance into more of a permanent kind of loan, better interest rate, removing mortgage insurance, getting out of that FHA, whatever that reason might be that you guys talked about doing it in two parts, now would be the time to get on the calendar and talk to either me or someone from the team. We want to make sure you guys are locking in the very best interest rate that you can. And the earlier this year that you can do that, the better. Many of you guys took out the buy now, pay laters to purchase Christmas gifts. Many of you have student loans that have been on deferment, which we're going to talk about tomorrow. Those have been deferred once again. They did push that out a little bit further, but those are going to come due this year in 2022. Those payments that you used to make are going to be due again. Many of you are not budgeting for those any longer, went out and bought other things that have replaced that payment, and now you're going to have both. So maybe you've got toys that need paid off. Maybe you've got student loan debts that need paid off. Maybe whatever it is that needs to happen, we want to try to solve that right now before things change. So again, get on the calendar, give us a call. It's 844-935-3634. That's 844 We Lend for You. It's WELEND and the number 4. That is the phone number to call us today. If you want to, you can go to the website, go to mortgagemomradio.com, and you can click on the book appointment button. You can book your own appointment for a day and time that works best for you. That is absolutely okay as well. And remember, give me a thumbs up, please, if you guys like the show today. Please subscribe to the channel so you know when we go live, and turn on that notification bell so that you don't miss those notifications. We hope that you guys enjoyed this one. I'll be back again tomorrow. We're going to talk about student loan debt, what's coming, and what can you do with it. And I'll talk to you guys real soon. Have a good one.
Debbie Marcoux, licensed by the Department of Financial Institutions and MLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.